The perfect mortgage in retirement. An act of the U.S. Congress created the FHA reverse mortgage in 1989. Over the decade since, the reverse mortgage has been refined and improved as an important tool for seniors to financially enhance their retirement years. A reverse mortgage is a non-recourse loan, which means it transfers responsibility for the repayment from the borrower to the home at sale or refinancing. The borrower has no personal liability for the repayment of the reverse mortgage. With a reverse mortgage, you no longer must make your normal monthly principal and interest payments, and that savings helps boost your cash flow. You cannot outlive your reverse mortgage. In markets with increasing home values, your home's appreciation will likely be more than the amount that the loan balance will increase, effectively living cost-free. A reverse mortgage has senior-friendly qualifying guidelines that includes pre-application telephone counseling by an approved counseling agency to assure the senior gets the best reverse mortgage structure for their individual situation. With sufficient equity, you have flexibility in how you receive your loan proceeds, a lump sum of cash at closing, a monthly payment to be directly deposited to your bank account, or a line of credit with a unique feature that that untapped, the available balance grows, which means you can have significantly higher credit limit available to you over time. A reverse mortgage can be a valuable additional tool that senior homeowners can use for flexible access to their home equity while retaining ownership and generating additional cash flow in retirement. To find out more, reach out to us and let's get a conversation going.